Okay, thank you very much, David. And I'd like to say thank you very much, everybody, for your continued patience with those technical difficulties. I didn't want to cut into too much of everybody's time with it. So we'll definitely get up and running right here, right now. So again, my name is Dave Aquino. I am a partner and head of options trading at basecamptrading.com. And what I'm sharing with you today is our number one options income strategy that has been extremely successful in the 2022 bear market. Now, this strategy, we've been actively trading it going on 6+ years in our membership. And again, it's one of our primary staple ways of trading. So you can think about the past 6 years, clearly a bull market, a lot of strength. We've had a lot of different types of markets in that time period, but where it's really shined comparatively to the overall performance in the market, and what I'm going to highlight today is kind of how the strategy has performed in this 2022 bear market, and where we see it going in the months ahead. Okay. Again, just a couple of risk disclaimers. Here's another one, but here's me. My name is Dave Aquino, and I'm a partner and head of options trading, like I said, at Basecamp. I graduated from Vanderbilt University, and I have over 24 years of real-world market experience. I was a general securities broker with Merrill Lynch at age 23, and then I joined the Vanguard Group as a registered investment advisor. I worked in the asset management service in the Ultra Client Group, and my team helped manage about 660 million of client household assets. I was a derivatives portfolio manager, and my specialty in trading is options income generation. I've been at Basecamp for over 9 years now, so we have real world experience working as a hedge fund advisor, doing training with hedge fund professionals and professional money managers. I consider myself a trading instructor, mentor, and a coach. And we here at Basecamp have over 40 years of experience, again, working with hedge funds and professional money management. I've been actively involved in working with individual traders for over 9 years now. We specialize in both trading technology and trading education. So not only do we teach trading strategies and different methods of approaching the markets, whether it be stocks, options, futures, but we do a lot of indicator development and more technical and that type of systems trading. Again, this is a small group. We usually have a live boot camp every year. Now, COVID has kind of dampened that down for the time being, but again, we are a trading community. The one thing that has been asked a lot of traders, individual traders, retail traders recently is, why is trading so hard? And that's especially, you can really feel that sharp difference in this market, because to be honest, the 10-year bull market, you could have thrown darts at a Wall Street Journal, invested in that particular stock, and chances are you made money. Everything gets shaken up when there's a bear market. There's a lot of uncertainty. The question is, we've had a correction. Is it going to get worse? Is it going to get better from here? Okay. Well, a lot of times when we start working with a new trader, there's certain aspects we highlight that basically explain why trading is difficult. The first thing is the markets themselves. Like I said, bull markets is relatively easy. That's where buy and hold traders, they have a lot of success. And to most retail traders, especially those that just have gotten started in the past 10 years, it's super easy. Now they get hit with a bear market, all these different forces, and it's not easy anymore. So bear markets are very difficult. Now, if bear markets were simple and all they did was fall, then it wouldn't be that hard, right? Easy up, easy down. The problem with bear markets are we get periodic bear market rallies. Okay, they come out of the blue. Next thing you know, you're in a bearish position and the market bounces up 10%. And you scratch your head and like, was that the bottom? And then sometimes you get fooled, you get lulled into a market and say, wow, this must be the bottom. I'm catching it right at the bottom. And now I'm going to start making my money again. Okay, so bear markets are very tricky. Sideways markets are very tough. There's a method of trading called swing trading. They want to trade for a certain period of time. Sideways markets are marked by a lot of choppiness, that the markets will go up for a day or two and then down for a day or two. And you look back, maybe you look back a couple of weeks, market hasn't moved at all. It just happens to chop up and down. So sideways markets are the worst because there is no distinct trend. So the markets are not necessarily your friend 2/3 of the time. Okay. The next aspect is time frame. Some traders are day traders. They get in and out during the day. Sometimes they're swing traders. They want to hold 2, 3, 4 days. Sometimes you think more along the lines of investments. You're a long-term trader. You want to buy and hold for a long period of time, or maybe even kind of in the middle, a position trader where you might hold a couple of months, right? So how you trade in a particular time frame may not suit the market that you're in. And if you're trying to swing trade in a choppy market or a sideways market, it's going to kill you. If you're trying to trade long-term in a sideways market, well, you're going to have a protracted period of time where you're not going anywhere, and it will get frustrating. Okay, so you have to be able to pair the time frame with the appropriate market condition. Okay, now those two aspects are pretty tough already. And then the third way, most likely the most confusing of these three, is the trade execution. If I get a new trader in and I say, okay, can you tell me about some of your most successful trades? They will talk about a certain trade, but they don't understand the strategy that they traded, right? I bought a call and it went up and I made 200%. Okay, what led you to that trade? What got you into that trade? Could you repeat that trade? And the answer is probably no. I just got lucky, right? So the process of actually being a trader means that you have a methodology by which you execute a trade the same way every single time. You have a certain set of conditions where you have established a very distinct entry technique and you enter the trade. You identify how long you're going to hold it, what profit targets you're going to have, and or what stop loss levels do you have in case you're wrong. And then how do you decide when you're going to exit the trade? And this needs to be systematic in a way that you can repeat the same trade over and over again, right? So that you can become better at it. It's the same way, like if you wanted to go learn how to hit a golf ball. You don't go up to the golf ball and have a different swing every single time and hope to have the same successful outcome, right? You go and practice the right way to swing a club, and you do it again and again and again. That is the same process by which you should approach trading. Now, if you can manage to put all three of those together, you can be a successful trader. If you're missing one, okay, just like a stool, you're going to topple over, okay? So inherently, that's what makes trading difficult, all right? Now, coming out of that previous 10-year bull market after 2008, 2009, this current market has experienced a technical bear market correction. And this market has dropped over 20%. Now we look around and we think, wow, we're getting a little bit of a bounce. This might be the beginning of the turn in the market, or it might be just a setup for the next bear market leg lower. You just don't know, okay? So you have to be prepared to trade no matter which direction the market chooses. The thing that complicates the current situation is a series of economic events that we're going through. there's been, like I said, a technical bear market drop. There have been a large number of traders that have just started in the last 10 years. They've never seen a bear market. They've never seen a 20% correction. And they're confused because they don't know if the market's going to turn or, God forbid, it's going to be more downside because they're desperately trying to hold on. Okay? We are fighting inflation. We have inflation rates, and UK just reported their inflation rate higher even than the United States is 9.1. UK was at 9.4 this morning. This is the highest inflation in 40 years. And here comes the Federal Reserve. Next week, it's not even a question of they're going to raise interest rates. They're going to raise it 0.75% to 1 basis point. Okay? The market hasn't seen a 1 basis point increase in forever. So this is the fastest rate of change in interest rates that the markets have ever seen. Okay? If we went from 1/4 point to 1/2 point to 3/4 point and possibly 1% this time. It is extremely fast. Okay? This is pushing the potential US market into recession. Okay? It's not yet there because we have a really strong level or a very low level of unemployment. Okay? So technically, it's hard to have a recession when you have very low unemployment. Now, if the unemployment level starts to rise, and look out, because that's kind of the last thing holding up the economy. All right? It's actually, if we're worried about the potential recession in the US, the European Union is in much worse shape with kind of the energy situation with Russia, gas being shut off, etc. The EU's got some issues. And the EU will probably, if the EU tips into a deeper recession, that's going to pull down the US economy also, right? The other question, and we don't think about it as much because we're trying to get past it, is potential future COVID surges, okay? New variants coming out, having, a potential effect on the US economy, maybe additional restrictions, etc. Okay, that's always out there. And not only COVID surges here, but in the EU and other places overseas, specifically China. With China's zero tolerance COVID policy right now, China is you saw last month their contraction in their economy. If they continue to maintain their zero COVID policy because President Xi wants to be named basically president for life, he's going to maintain that zero tolerance. And that means shutting down parts of China's economy. And that's a problem because China is just barely treading water and staying positive. If China goes down, the rest of the world is going to go down too. Where do you think most of the stuff gets made in the world? Okay? And not even thinking about just their COVID policy, they have real estate issues. People aren't paying their real estate loans, and that's their primary means of investing and saving, just like our market, our stock market. Theirs is real estate. So there are big issues there. Can you see the economic events that are on the horizon? Can you see how these are concerns that are going to create increased volatility in the US markets? Okay? How is it even possible to make money in this kind of bearish environment? It's very, very difficult unless you have an income trading system. Okay? Now, the reasons to trade an income trading system in a market like this is because an income trading system is a continuous method of trading the markets. It creates a baseline level of monthly income. Okay? If you're trying to trade the market right now, you are constantly searching to find the next trade and have a winner. Better yet, hit a home run or at least come out positive, right? And after you have a successful trade, you have to go out and look for another. More research, more time, and hope that, okay, this one works also. An income trading system does this automatically for you. You always know what your next trade is going to be. And it's almost like clockwork. It comes around based on the calendar, how many times you can take a trade every single week, okay? An income trading system is comprised of consistently repeatable trades that are high probability and that can create dependable profits, okay? This trading system needs to be proven in many type of markets. They need to work in both trending markets, whether you're talking bullish or bearish or sideways, okay? It has to work all the time. An income system, trading system, must be a reliable way to consistently make money. You have to have an idea how much you can generate with every single trade, okay? You also want them to be the highest probability trades you can take. Therefore, vice versa, it's the smallest level of risk, okay? High probability equals small risk, right? And these should be trades that you have your highest confidence in. Now, if they're very high probability, chances are you're going to be pretty confident that you're going to do well with them, okay? And then in this market, the most important thing is that it should generate consistent profits regardless of what kind of market you have. Because in this kind of environment, you don't know what kind of market you're going to get, okay? That's the most important thing, okay? In my trading room at Basecamp Trading, we do these income trades several times a week, and it gives us consistent profit many times during the week. We average anywhere from 3 to 4 trades a week. Our goal is to win at least 90% plus percent of the time, okay? We want it to be super simple. We want it to be a step-by-step trading program. It needs to be robust, meaning no matter how volatile or how calm the market is, it needs to be able to function. It shouldn't be overly complicated. It should be straightforward and relatively easy to understand, okay? And then it must be in that step-by-step format so we can follow it every single time we trade, and therefore we can base a consistent trading plan around it, okay? Our income trading system is called 11-hour options. I know it's kind of a weird name, but there's a reason for the system being called 11-hour options, okay? Our 11-hour options trading program is a proven, consistently profitable way of trading options. It is a credit spread selling strategy that we implement several times a week, and it's been proven in many market environments, okay? In the nearly 6 years that we've been trading it, that's well over 1,253 trades. We have, on average, about a 94.4% win rate, okay? The average return produced per winning trade is about a little over 5.1%, 5.13, okay? So it's like taking these small steps going forward as often as you can. The way I like to visualize it, so you can get a feel for the type of progress you're having. Saying you're on a long road and you see the city in the distance, right? You're on a highway, there's nothing around you, the city's in the distance. You're making your way there, walking on this road. Your job is to make forward progress, okay? And so you take 19 steps forward, and then you take 1 step back. That's your losing trade, okay? Then you take 19 steps forward and 1 step back. Those 19 steps forward is the 94% win rate. Think about the progress you'll have over time that each step going forward, creates about a 5% gain, okay? That is the type of consistency and growth in an account that we're trying to produce. Compounded growth over time in a very consistent manner, okay? Again, this is a high probability credit spread trade. Again, the goal originally when I created it was at least a 90% win rate. We place the trade 1 day before the options expire. That's why we call it 11-hour options. We place it roughly 11 o'clock the day before expiration. So if I have an expiration on a Friday, I place this trade probably around 10:30, 11 o'clock on Thursday morning, okay? And once I get my trade filled, I will hold it all day in the afternoon on Thursday, the rest of the day, and then all day Friday. And if it works, by the end of Friday, the trade closes and we make our 5%, right? The chart that I use to create these trades is based on a 60-minute chart. And we're evaluating things like, the direction that price is moving. We look at the chart. We look at price momentum. Which direction is it going? Do we have good support and resistance levels between the current price and where our credit spread is? That gives us protection for our trade, okay? The overall trading goal is to generate this income stream through overnight decay, all right? Because we're selling credit spreads, we're selling premium, that what we're doing is harvesting theta, or we are selling something of value in hopes that it expires worthless, if that makes sense. And this income goal, generally, we aim for about a 4 or 5% return, okay? So most of you trade traditionally. I think it's going up. I'm going to buy a stock when it's low and sell a stock when it's high, right? Or if a stock's going higher, I'm going to buy a call, and then when the price goes up, I'm going to sell that call, right? If you're trading options. How is 11-hour options different than what we do traditionally, than buy low and sell high? Well, again, we're selling credit spreads. So that requires us to look at charts from a completely different point of view. We want to focus on selling our credit spreads, the short strike and the long strike, away from the current price direction, okay? We want to think about where prices most likely will not be when expiration occurs, okay? Now, I'm going to give you an example here. I call this a background playground example, and it kind of makes you understand a little bit better exactly what we're doing, all right? So when I was little, my older brother and I, we used to like to play hide and seek, okay? So this is our house, and in the backyard, we had a big oak tree. And here I am, and my big brother, being a nice guy, he'd always play with me in the summer, okay? So he'd say, okay, let's go play hide and seek. So he'll close his eyes, and then he'll start counting. So me, I'll run into the back, and I'll hide behind the oak tree. And he comes and he sees, he finishes counting, and I'm over here behind the oak tree. And he looks around and he says, well, I don't see Dave, so I'm going to go across the street, see if he went over to the neighbor's house. So I see him, I'm behind the oak tree, I see him going south. So I'll turn, and I feel pretty comfortable where I am, but I'll go in the opposite direction. I'll go north. Now, if we run out of time, because he's counting, he only has like a minute or two to find me. If he doesn't find me, then I win that round, right? So if I clearly see he's going in one direction, I'll go in the opposite direction. And if he doesn't touch me, by the time the turn is over, I win that round, okay? That's basically what credit spread selling is. So let's go ahead and look at an actual chart. This is a security that I use a lot for 11-hour auctions. It's SPX. It's the cash settled S&P 500 index. So we identify on the hourly chart that price momentum is moving down. Price action is moving down. Price momentum here is clearly going down. So just like my brother, who's going south to my neighbor's house, I'll go in the opposite direction. I will be up north. So if I see that price momentum going down, I will sell a credit spread up here. Now, this is an hourly chart. And if I sell it on a Thursday at 1:30, I have all the way to the next day to hold it, right? This is the expiration that following day. So if price does not come up and touch my credit spread within 11 bars, I win that. And when I win, I make a 5% return on my money. Okay? So after that trade is over, I continuously watch where SPX is going. I get a reversal pattern. I see price momentum turn. I see price action start to turn higher. So in this case, the market is turned north. So what I will do, I will sell a credit spread down here. Okay? So after I sell the credit spread, price continues to move up. Price momentum moves up. Price doesn't come down and touch my credit spread. So I win that round. I make another 5%. Okay, market goes sideways. And then I see this bullish breakout there out of that little channel. I see price momentum go higher. When I see price momentum go higher, I sell another credit spread, right? So I make another 5%, right? Price comes up, it makes a double top. I see momentum start to flatten, and then I see start to go south. There's a double top there. Price momentum starts to go south. So I'll sell another credit spread up here. If price doesn't touch my credit spread within 11 hours or 11 bars, I win 5%. Okay? We go into a consolidation again. And then I see price break that support. I see price momentum head south. When I see that breakout, I'll sell a credit spread up high, right? It goes south, I sell it up high. If price doesn't touch the credit spread within 11 hours, I make 5%. We go into a consolidation channel again. All of a sudden, I see it break support. Momentum really starts to accelerate here. I'll sell a credit spread here. Okay? So 5%. So let's actually disregard this one. I was just giving you an initial example. These are the best examples, pivot. So let's just say I win each single time, 5% every time. You're like, wow, that's kind of impressive, I guess. Well, let's actually put some math. Let's say I trade this with $2,000, right? $2,000 committed to this one credit spread will generate a 5% return, right? So $2,000 of buying power times 5% creates $100, right? So after I win that one, I'll reuse the same $2,000 for the second one. Notice I'm not adding the $100 back in, so I'm not truly compounding it for simplicity on this example. So I win the first one, I win the second one, I win the third one, I win the fourth one, and I win the fifth one. And every single time, I'll recycle that initial $2,000. So I've won 5 times, $100 times 5, okay? So that creates a total profit of $500 and the buying power of $2,000. So in the span of, this is like March, and this is the end of March, right here. So this is 1 month. Just trading these trades, I only did five trades, right? In a month, what's my total return on $2,000? 25%. I grew the account by 25% in 5 trades over the course of 1 month. Okay? Remember when I was telling you about these trades earlier? I take anywhere from 2 to 3 of these 11-hour option trades per week. So I do anywhere from 8 to 12 trades a month. I'm just showing you 5 trades in a month, and I already grew the account by 25%. Now think about what would happen if I actually reinvested the winning into the original position. I would actually compound the winning so the account actually grows even faster. Okay? I wanted to use this particular example to show you the simplicity of the trade. They're just following along the price action and momentum of the hourly chart. We call it surfing the chart. and we recycle those small winning trades. And the power of these trades is the fact that, one, they compound, and two, that they're quite frequent. Okay, we don't take overly aggressive, risky trades. A 4 or 5% return is actually a very safe risk-reward ratio. If we actually tried for 10% or 15% winners, our risk would go up, and therefore we would be taking lower probability trades. So the sweet spot we've found over time is about a 4 or 5% return. Okay, that's 11-hour options. That is credit spread selling the way we do it. In summary, 11-hour options, the profits come from time decay, that the passage of time is always in your favor. Okay, our goal is consistency, to win as often as possible, as consistently as possible. And the 1,253 trades that we've done, that we've kind of cataloged here, we have a 94.4% win rate. The profit goal, again, is balanced reward and risk. On average, we do anywhere from 4 to 5% return per trade. The reason why our overall rate of return is a little higher than 5% is occasionally we get the opportunity to do an iron condor. And when we win those, we make a 10% return on our money. Okay? The most important aspect of 11-hour options is that we want to have good risk control. Our strategy keeps our losses at a minimum. We look to have a 3 to 4 times stop loss. That means if we're making $100 per trade, we're willing to lose $300 to $400 per losing trade. You're like, oh, that doesn't make any sense. Well, let's take 20 trades, right? Okay, so how much do we make in 20 trades, all right? $100 per trade. So if we win 94% of the time, so that's 19 winners, and that creates 19 times 100, we make $1,900, right? And then 4 times loss, that means we are willing to lose $400, right? It looks really big, right? So what's the net result after 20 trades? It's $1,500. And remember, in order to generate 200, how much buying power did we need to commit? $2,000. That's the buying power you need to get a 5% return, and you generate $100. So your total profit after 20 trades is $1,500, and the capital you use to do that is $2,000. So you have a 75% return in 20 trades. And on average, how long does it take to make 20 trades? About 1.5 months. That's traditionally what it's been. Actually, the CBOE gave us a gift this year that we actually have expirations on the security that we trade. We can trade it every single day if we wanted to. But right now, we still, on average, trade about 3, sometimes 4 times a week. Okay? So in about a month and a half, based on these numbers, your portfolio can grow. We're talking about a 75% return on your money. Okay? That is the math of it. But what about real life, right? Let's actually look at a bottom line case study, right? I'm just watching my time here because we had a little bit of a delay because of the technical issue. But this is Jim H. He's from Tyler, Texas, and I met him at a trading boot camp. Now, he had been a member of our Basecamp trading family for about a year, and he joined us at the boot camp, and I had a presentation on 11-hour option trades. He said, Dave, I've been watching you do this for a year, and it's very interesting, so I'm going to do an experiment. Now, just a little background on Jim. He's a CPA, so he's really good with numbers. He liked the numbers. He said, okay, I'm going to commit a small account. Let's give it a try. So he's going to just trade the S&P 500 SPX with me because I do these trades in my trading room. All right, he's going to follow along and do the trades. We have good reward and risk. We're looking for 4 or 5% return. We're going to use the stop loss levels that I told you. So again, the boot camp was in October, right? He started trading in November. He did quite well. He kept trading in December. He did quite well. And like, okay, I'm going to roll right into January. So every single month, he's sending me statements. I'm like, oh, that's really good. He said, yeah, I'm just going to keep it up. By the time we got to January, he's 90 days in. He said, Dave, this is working really well. I'm going to keep doing it, even though I'm entering my tax season. So he keeps going. February, March, April, right? By the time he gets to April, he has had 0 losses in 11-hour options. Now, I'll be the first to tell you, that doesn't happen very often. Maybe he got kind of in a lucky streak, because remember, we're talking about a 94% win rate, right? So, but in this case, it's 0% losses. I don't know. We do have some techniques where you can get out of trades that start to go against us, and I think he did implement a couple of those. But still, it was actually a very favorable trading season. So he's sending me these statements, so I can follow along. So here's a screenshot of his November statement. What I circled here is the overall change in the portfolio. It grew by 28.8%. He's only doing 11-hour options. He only has about 10,000 in the account at this point. Okay? No, I'm sorry. No, he's got about 30,000 in. I actually never looked at the total. About 30,000 in, but it's got a 28.8% return. Okay? The next month, December, 16.9%. Now, if you look at this, 28.8, and then December is 16.9. I'm like, wait a second, Jim, because he sends me this in January. I'm like, Jim, I'm a little concerned. I knew we did much better than 16.9% in December. He's like, did you have any trouble? He said, no, Dave, I didn't have any trouble at all. I didn't have any losers, but I only traded half the month. Okay, because I was on vacation for Christmas. Okay, that's good. So he only traded half the month. He came out with 16.9%. So sorry about that. So I said, okay, so let me know how you did in January. 38.3%. He jumped right in. That's why he kept going through tax season. Okay, February, 24.7%. He keeps going. He goes into March. He goes into April. And again, we're in communication, but by this time, he's rolling because he knows exactly what he's doing. So by the time he gets to May, and end of May, I followed up with him, Jim, how are you doing? I hadn't heard from you in a while. And he says, look, Dave, I had some family issues to take care of in May. I'll send you my screenshots of my trading accounts. I'm trading 3 accounts now. And I'll break it down for you guys in a moment, but he's trading 3 accounts because he's had such good luck and good trading with it. And in the course of 2 weeks, these are his results. The first account grew by $3,286. The second account grows by $4,340. And the third account grows by $3,176. He's taking these pictures with his iPhone, okay? And he's texting them to me. And he summarizes it like this. The totals for all 3 accounts was $10,800 for 2 weeks in May. Okay, just 2 weeks. So I'm going to break down those statements for you. All right, he started with a total amount of $92,712 spread across 3 accounts. He trades 2 weeks and he generates $10,800 in 2 weeks. That's an 11.65% growth in 2 weeks. And that's more on average than the S&P does in a good year, traditionally, right? Okay, now someone would say, well, that's a lot of money and that's all he's making. Well, when you get to that size, you don't trade your entire portfolio in one single trade, right? That would be kind of very dangerous. So he kind of has it spread out. He doesn't trade everything, but he grows a $90,000 account by over 11% in 2 weeks. That's fine. That's enough. Okay. So I said, okay, well, let me know how you did the following month. Right. So same 3 accounts. This one grows by $8,460. This one grows by $6,017, and this one grows by $5,852. So in summary, the following month, those 3 accounts, which now has an account size of over $100,000, because last month he made over $10,000, so he's growing the account, right? That $103,000 generated $20,329 in profit in 1 month. That's a 19.63% growth in the month of June. All right. What's crazy about those numbers is not just the $20,000, right? If all Jim did was keep his trading at this level and never increase the size of what he normally trades, this $103,000 or something close to it can generate close to $250,000 in a year. That's what we call cash flow. And that doesn't include reinvesting it. That's just trading the same way with a $20,000 goal every month, and then you can create $250,000 in a year. That's the power of income trading. That's what 11-hour options do. Okay. Now you may say, okay, well, that's really cool, and that's Jim, but how have you done in this market? This market is unlike anything we've ever seen, right? I agree. In 2022, this bear market has been crazy. So these are actual trading results of published trades that come directly from my trading room, okay? Now, I'm not going to go into a tremendous amount of detail here, but this is the month. These are the number of trades. This is the number of winners. If it's blue, it's a bullish trade. If it's red, it's a bearish trade. I trade for simplicity's sake and efficiency's sake, and it's actually the best way to trade this strategy. I use the S&P 500. You can use an individual stock or whatever if you want to, but that's complicated. I want straightforward, simple, robust, easy, super simple, give me my money, okay? So that's what we have here in SPX. So in the month of January, we took these trades. These are the actual details of the trades right there. That's how we construct them. That's how I give this information to my traders. We are looking for roughly a 4 or 5% return. Now, in this model portfolio, we are trading 20 contracts. 20 contracts, that is $10,000 of buying power. That $10,000 generates a 5% return every other day, okay? So we make $500. Now, if it's a winner, it's green. If it's red, we actually had either stopped out or we have an advanced strategy. We can defend it and get out of the position without necessarily losing any money. But just to keep it super simple, if we had to do something with it, or maybe there's a chance you're getting stopped out, we mark it by this, okay? Delta neutral overweight. That's the name of our protective trade. But we count that as a loss when we're tabulating results. So in January 2022, we have 12 trades, 10 winners, okay? In February, we have 10 out of 10. In March, we have 12 out of 13. Okay, one thing about January, now I remember this is FOMC. I actually advise traders not to take that trade. So I just published it just as an educational thing, but I just did count it as a loss, mainly because I did send it out in an email. So February is 10 out of 10. March is 12 out of 13. April, 9 out of 10. May, 12 out of 12. June, 12 out of 12. This is the monthly expiration date right there. That's why it says weekly. Okay? That is June. All right? So far in the first half, 2022, when all heck is breaking loose, we have a 94.2% win rate. And that is basically, how many we did? I think we had 4 losses. That's 65 out of 69. And if you don't count that one that we shouldn't have done, that would have been 65 out of 68. Okay? No, 66. No, that's right. 65 out of 68. Yep. So that is an example. Maybe I did that wrong. And we average about 5% return. A couple of those, even though I didn't mark them, were iron condors, especially if they're bullish, bearish, side by side. A couple of these, this might be an iron condor, stuff like that. You might say, what about July? Well, this is how we represent it in the trading room. This is June. So July, and we publish this out. We show it in the trading room. We send it out via email to our membership, etc. So here's the trade. Here's the setup. There's the strikes. This is what we're trying to get per $5 wide spread. And there it is. So this is July 1st. We made money. July 5th, we made money. July 6th, we made money. July 8th, we made money. July 11th, we made money. The 13th, we didn't do it because we had the CPI release Wednesday morning. Okay? Sometimes we'll trade the FOMC announcement, sometimes we don't. Okay? Here is, again, Friday. And then that's last Friday. We got stopped out there. And then here's Monday. That's today. Okay, so I think we're like 6 out of 7. That's July, right? So regardless of if the market falls or rebounds or moves higher in the second half of 2022, we still will consistently make money in the second half of the year. Okay, my question for you is, where are you going to get your profits? I still get emails from Jim. He makes comments in my trading room. Said, Dave, I did good last Friday, Monday, and yesterday. I did Iron Condor one day, and I got 5,000 for each. So basically, Jim's telling me he made 15,000 in the last week. Okay? So I guess my question for you here as I wrap up, are you going to be ready for the rest of 2022? Right? To maximize your trading profits in this market, to increase your winning consistency, stop fearing the market. Just make a decision to make money. This is the strategy to use. Collect up to 3 to 4 paychecks a week and compound that over time. Okay, now's your chance to finish and win in 2022. So what I have for you is the 11-hour option workshop. You can generate 3 to 4 paychecks a week. You can do these trades every other day. Again, high probability, consistent income. You can run 52 weeks a year. I'm going to also get you into the Basecamp Platinum membership. This is where you receive the 11-hour option trades by email or iPhone or Android app. These are the exact trades that we all use, that Jim still uses today. The value there is $97 a month. And what you're going to get is the benefit of Platinum membership and joining a learning community of like-minded traders that focus on self-improvement, self-sufficiency, and are dedicated at taking control of their own financial destiny. If that sounds like you, you're going to find yourself right at home with us. So basically what I have is the 11-hour options workshop. It retails for $397. The Platinum membership, we're going to put that in there. That retails for $97. Total value is $494. We're going to include all these bonuses I've created over time: trading checklist, calendar checklist, a spreadsheet you can use to track your trades, the slides from the workshops, and then a number of bonus videos that teach you how to do these trades in both Thinkorswim or TradeStation. We're going to put that into the mix, and in total, what you're going to get is the workshop, the Platinum membership, so you can receive the trades, and you can get that guidance you need getting started, and the 11-hour option bonuses, all 7 of them. Total value $691. But because you've taken the time to be with us today, we're going to discount that down to $49. We want to give you the tools to get going. The link is www.bctnow.com/credit. Okay, guys, that's what we have for you. We have a 30-day money-back guarantee. If you need any help, you can contact us at support@basecamptrading.com or call us at 919-935-0010. All right, this guy sent me this picture of himself after he bought the farm. He bought an actual farm in Texas. He's going to do his own Dallas thing. And if he can make $15,000 every 6 days, he can do this. These are the exact trades you're going to get as part of the membership, the same one that he uses today. Okay? The link is www.bctnow.com/credit. And again, you're going to get $691 of value for $49 with a 30-day money-back guarantee. Okay? Any questions? Thank you, David.